Luno, the fastest, easiest way to buy Bitcoin. If you're just getting into crypto, it's the perfect place to start. Hey guys, and welcome back to the Heilpern show, powered by Icon Plus Capital, the VC firm, and it is sponsored by BlockFi. So I've left a link somewhere, I think in the description and in the comments. So if you like, you can take a look. They offer a really cool interest rate, so definitely hit on that. And yeah, really great interest rates. I think you also get around, around 6% on your Bitcoin. So really, really interesting there. So joining me today, we have a very exciting guest, somebody who I've spoken to a few times, and every single time I speak to him, I'm always learning more. It's the founder, CEO, CIO of Morgan Creek Capital Management. It is Mark Yusko. Mark, great to see you. How are you doing today? Can you hear me, Mark? Okay, maybe you cannot hear me. Are we having a technical issue? Mark, can you hear me? Okay, guys, let me know in the comments if you can hear me or not. Maybe, I don't know if it's me or if it's Mark. Let's have a look. I think my mic seems to be working. Mark, can you hear me? I don't know. I don't know if it's me. Okay, guys, can you let me know in the comments if it's me or if it's Mark? I don't know. Mark is frozen.
Hey, how's that?
Yes. Can you hear me?
I can.
Oh, cool. I don't know what happened.
There was a button I needed to push, so I pushed the button, and now we're live.
Oh, perfect. Well, welcome to the show. How are you, Mark?
I'm doing great, Thanks for having me back, and great to see you.
Yeah, it's a pleasure. I'm always learning so much from you. I think we first spoke back in maybe 2018 or 2019, and we're talking about gold and Bitcoin and, you know, whether it really can replace it. So we're going to get into all of that. But I do want to start off with going through some of the latest headlines, because it's been a crazy week. Unfortunately, things are down. China's back in the news. I want to talk about Evergrande. Yeah. I'm sorry to bring it up. I know it's not the best topic. Everybody is very emotional right now, but I think it's unclear what necessarily happened. And I'd really like your explanation, breaking down what happened and why there's been such a spillover into the crypto markets. People often think, you know, Bitcoin is not connected and, you know, not affected by these things. But can you break it down for us? What exactly happened?
Yeah, well, everything's interrelated in some ways, right? I mean, nothing is fully independent of global capital flows. And look, the Evergrande story is interesting in so many ways. I mean, one, it is kind of the epitome of the rags to riches story that happened in China. You know, you had this process over a long time, 30 years, of basically dragging, you know, the population of the US and Europe put together out of abject poverty into middle class. And in order to do that, you had to build 4 cities the size of Philadelphia every year. Mm-hmm. You know, just think about that, right? I mean, just building 4 cities the size of Philadelphia every single year. And the only way to really do that was to have, shall we say, captive companies. And so companies like Evergrande were property developers, and they were very well connected, and they had access to a couple things: really cheap land, basically grants from very powerful people. They had access to cheap financing. Mm-hmm. And so the leverage ratios were high, and they built out much of the, you know, apartment buildings and complexes and things that we saw. Now, it would have been fine, I guess, if you stop there. But as these companies grow, they become involved in other financial services. And as fate would have it, we have some cycles in the market. And we had the big problem with the global financial crisis. And again, making a long story short, they used the financial services infrastructure of China to raise capital to essentially, you know, booster their balance sheet. And so those products, those financial products, were sold through the, you know, or to the masses, and people thought they were getting access to great, you know, long-term investment property. But as we know, and I think you and I have talked about this in the past, look, leverage can never make a bad investment good, right? But it can actually make a good investment bad. If you're forced to sell an asset at the wrong time, that can put a lot of pressure on price. And the problem is, once you get the margin call, if you can't go back and raise capital, you've gone to the well too many times, which was the case here, and maybe you made somebody angry in the Politburo, or maybe the whole movement at the highest levels of government in China changed to this idea of, equilibration of the classes, right? Let's take some from the top and push it down, the social prosperity thing. So I think all of those factors came into play, and it wasn't just Evergrande, right? There's a whole bunch of property developers. Equity is basically trending towards zero. They still have assets, and those assets in many cases are still pretty good. The reason crypto gets involved is if you're prone to speculate, and it's a problem in Asia, a lot of gambling, and take Macau, for example. That makes Vegas look like, a church gathering. So prone to gambling, prone to speculation. So you speculate in a few condos that you lever up. Then you might speculate in stocks and lever up because, margin debt is cheap. But the real problem was in crypto, right? In crypto, you could get not 5 times leverage or 10 times leverage or 20 times leverage. You get 100 times leverage or 125 times leverage. And again, just do the math, right? If you're 100 times leverage, a 1% move wipes out your equity. You're talking about, take Bitcoin, an 80 vol asset. 100 times leverage on an 80 vol asset means you will lose your Bitcoin. And I had somebody call me and say, they stole my Bitcoin. I said, nope, no one stole your Bitcoin. You made a dumb decision to lever up 100 to 1, and you lost your Bitcoin. They didn't steal it. Now, I will say there is an alternative view, which is if the lender, if I'm giving you, Layah, if I'm giving you a loan out of the goodness of my heart because I think, you're a really good investor and I want to back you.
Yeah.
Okay. However, if my goal is to give you excessive leverage so that I can actually take the collateral, that's a little sinister. And I'm not saying everybody did that, but I'm saying that is another way to look at it, that maybe it wasn't all out of the goodness of their heart. Maybe there was some plan to accumulate crypto assets that way. So who knows? But it's all interrelated. And once leverage starts to unravel, it can get ugly really, really fast. And I think that's what we're seeing right now.
So people obviously enjoy leverage trading, particularly in crypto. So is there anything people can do to, I guess, protect against something like this? I mean, either you're very good at spotting when something's happening like Evergrande and, there's way too much leverage, too many risks, or you just don't trade with 100x leverage.
Never, ever trade anything with 100x. I mean, that just pretty much rule of thumb, unless you're a government, right? If you're a government or a government-sponsored entity like an investment bank, where you're too big to fail and no matter what you lose, you will get bailed out. And think of the global financial crisis. There were plenty of firms, Lehman and others, that were 40, 80, 100 times levered. No one went to jail. In fact, we bailed them out. It's unfathomable. But for the individual, don't do it. And no matter how easy it seems, and even if you win early, you will lose, right? It's kind of like the winner's curse. You go to a casino and you place a bet and you win. It's the worst possible thing that could happen, because now you will stay and lose all your money. And then you'll go to the ATM and take out more and try to win it back, and then you lose more. The best thing is you take a certain amount, you play and you have some fun and you have a couple drinks and you lose it by the end of the night. That's really good. But if you win early, you'll think you have skill, and the odds are not in your favor. So investing, buying assets below their value and holding them for the long term, it's a really good thing. Everybody should do it. Trading, where you're trying to buy assets because they're moving and sell them to someone else before they stop moving. Tougher. Some people are good at it. Not for me. Some people are good at it. Speculating, right? Buying something that you have no knowledge of and doing it just because it's moving, you'll get wrecked. But the worst is just degenerate gambling, right? If you're literally playing a game where the odds are not in your favor, I mean, literally Russian roulette odds, don't be surprised if, you shoot yourself in the head. So
put very well. I like the use of degenerate gambling, particularly in this industry. We see a lot of it. But I want to stick on China for the minute because we've seen another crackdown, another ban. So in your opinion, how serious is this? I know there's that joke that every year China bans Bitcoin. But obviously
not every year.
Sorry, every 4 years.
2017, 2021. So it is every 4 years, whether we need it or not, they're going to ban. This one's real right now. And why do I say that? Well, in 2013, they kind of mouthed it. They didn't do anything about it. They just kind of said it. There were no teeth. And really, it was a very short correction, and we're off to the races. 2017, they kind of meant it, right? I mean, they literally said, exchanges, you're not welcome here, go away. And the prices went down 40% over 2 weeks after the original announcement in February. And they didn't recover for, a while. And it took, Japan and South Korea say, bring it. We'll take the exchanges, love it. We can tax them. We can partner with them. And I think that was China basically saying, look, we're playing the long game. And, here's the problem. The problem with China's very misunderstood. Everyone thinks they're bad and they're evil. And, we paint the picture of them here in the US as like this adversary. China's playing a whole different game. I tweet about this, right? China playing Go. We're arguing about how to set up the checkerboard. We're playing an old game using tariffs from the 1930s. They're playing Go. They're playing a totally different game. They are leagues ahead, miles ahead on the almost ready to launch the e-renminbi. The e-renminbi is why they're doing this, right? They want to have control of their currency, as does every other central government. And here's the interesting thing. Overly indebted governments have done this since the beginning of time. What do I mean by this? Meaning use regulation and use threat of punishment to stop innovation. I mean, go back to the 1930s and in the Depression in the United States. It was criminal. It was made a criminal offense to own gold. Why? Well, because gold was money, is money. Gold is money. Gold is the only asset in the world that is money, meaning it exists in the absence of a liability. Everything else is credit. Every other currency in the world has an associated government debt associated with it. So the only money, and it's worked for 5,000 years, is gold. Now, Bitcoin, arguably, depending on who you believe, is digital gold. I actually ascribe to that. It's the perfect substitute. It's a scarce asset in digital form. It's more portable. It's more divisible. Has all the function. Doesn't have an associated liability. It's borderless, nation stateless. So I think it does take that place. So just like the United States made it criminal, made it illegal for a citizen to own gold. So for 40 years in the United States, it was illegal to own gold. Now, did people own gold? Of course they did. But they did confiscate gold from some people. They incarcerated some people. And I had this debate with my partners this morning. They're like, no chance, the United States follows and does this. Maybe not. And how do they enforce it? It's not seizable. I said, well, here's the thing. Put yourself in this situation. You're arrested. You're locked in solitary confinement. Give up your private key. I'll let you out. Who does that? Who doesn't do that? I don't know. I might give up my private key if it means total loss of liberty, or give up my private key. I might. I'm not saying I would. And now I'm going to
No,
get
I'm with
hate,
you. I understand.
for saying, oh, you're not going to go down with the ship. I'm like, well, it depends. So
Depends how painful that ship is, right?
exactly,
How destructive that ship is.
Governments have tools to enforce. I know they can't seize, right? They can't hack into the blockchain and take your Bitcoin, but they can make life difficult. And that's what China's doing, because China absolutely positively is playing a different game. They are miles ahead. They know exactly what they want to do to create this Belt and Road Initiative, which is the recreation of the Silk Road. They are creating trade routes and a community to pull the center of the universe back to where it was for 1800 last 2,000 years. For 1800 of the last 2,000 years, the center of the universe was squarely in China. Then it moved to Europe for 100 years, and now it's been in the US for 100 years. It's going back to China. There's nothing anybody can do about it. Now, no one wants to believe that. Nobody wants to think that they're capable of it. But they're really smart, really highly educated, and they are doing the things that, at least looks to me, that you would do if that was your plan.
So there's so much going on here, because the way that, you talk about China saying that, they're playing Go and they're well ahead of us. That sort of, to me, implies that we should therefore be doing what China are doing, especially especially in your opinion, if we're going back to China being the center of everything. But that would then imply that we, being the West, the UK, the USA, needs to do the same and also crack down on cryptocurrency regulations. So that leads me on to my next bit, the infrastructure bill. And just generally, with all these issues with the SEC, what is and what isn't a security, where are we going with this? People are concerned,
and should be concerned. You should. People should be afraid, and they should be legitimately afraid. There are a couple things, right? One, incumbents have used regulation to beat back disruptors forever, right? Whether it was the buggy whip manufacturers and the street sweepers at the turn of the century that paid the lobbyists to put up regulation to make it hard for horseless carriages to come into New York City, or whether it was the train companies lobbying to make it hard for airlines and airports to get built because they didn't want people using airlines, whether it was net neutrality around telcos, whether it was cable versus terrestrial television, whether it was satellites and trying to limit the number of satellites. Incumbents will always use regulation because it can be paid for. I love it. Americans, we're great, right? We have this American exceptionalism and, all you other countries, you're corrupt. China's corrupt. Russia's corrupt. India's corrupt. What is lobbying? That is corruption. That's plain and simple. It's corruption. I mean, I use my favorite example, ExxonMobil, 2013. They made $40 billion of profit. How much should they have paid in tax? 40% tax rate back then. They should have paid $16 billion. Well, they lobbied $327 million that year, highest in Washington. And what was their tax bill? Minus $1.8 billion. They actually got a refund. That's one of the great investments of all time. You turn $327 million into, $58 billion into $17.8 billion in a year. Awesome. So lobbying is real. And what the banks are doing right now, right? I believe, personal opinion, I think the banks are playing hot and heavy with the regulators and putting up hurdles. They're not full-on barriers. They're not, barbed wire fences with razor wire, but they're hurdles for, the BlockFis and, one of our biggest investments. And Brian Armstrong is going at it with Goldman Gary. And that's the thing. Look, Jay Clayton, I thought he actually did a really good job. He was measured. He was prudent. Now, some would say he was too slow and he didn't pass the ETF, but at least we knew the SEC was going to be consistent in their regulation. Right now, the rhetoric has strengthened, and it appears that maybe the roots or the connections to the banks, because the banks are the big losers here. And if you noticed on Friday, there were 10 organizations in China that all said the same thing, right? We're making this illegal. But who was the spokesperson? The Bank of China. Why? Because the Bank of China has an over-levered banking system that cannot survive if deposits funnel out of it into things like Alipay and, crypto. And so they cracked down on Ant Financial and Alipay because they siphoned $90 billion out of the banking system. Said you can't do that anymore. Now they're saying we don't want any more to leave into crypto because that will cripple the banks even more than they're already crippled. And I think the same thing's happened in the United States, where these big banks are like, wait a second, we don't want our deposits. Because if I put my money in the bank, I get paid zero.
Yeah.
I take that fiat, convert it into crypto, deposit it at BlockFi or anybody else, I can get paid. Why wouldn't I do that? I do that. I think that's awesome. But the bank doesn't like that because now their deposit base shrinks. Maybe the loans aren't as good if the economy is not going to grow as much. And with demographics as bad as they are, we're certainly not going to grow like we used to because we don't have any working age population growth. And we got a baby bust. So we have all kinds of challenges for economic growth, loan growth, banking growth. And if everybody takes a portion of their wealth and opts out, it could get tough.
Then, absolutely. But practically speaking, I'd really like to understand where you see, let's say, in the next 10 years, this industry with, from what I can see, regulation is heating up. Everything is heating up. The more this industry expands, not just Bitcoin, but DeFi and everything that's going on. You said we should be worried. How worried?
No. Look, first they ignore you, then they laugh at you, then they fight you, then you win.
Okay.
So when they were ignoring us, 2009 to 2015, and everybody's partying and having fun and developing, and it was just a bunch of nerds, and just kind of no one cared. It was a little tiny science experiment. 2015, like, oh, wait a minute, that's no longer a science experiment. That's a Ponzi scheme. Ha ha ha! You guys, again, you're just nerds. You don't know anything. We're finance. We're banks. We're in charge. 2021, now it's a fight. And 2013, not a fight, right? That's whatever. We're banning you, dumb little game, but we're not gonna do anything. 2017, we're banning you because you're stupid. It's just a stupid little game, right? This time, we're banning you because you're a threat.
Of course.
Now, name a technology that had to overcome this type of regulatory pressure, shaming in the press, the internet,
even right? Facebook. I was going to say even Facebook.
Everything.
They had that day.
Name a technology that went back in the bottle, right? That they put the genie back in the bottle. You can't do it. There's no way, because it's a better form of ownership. And what we're talking about here is not just Bitcoin, not just Ethereum, not just money. We're basically talking about value.
Yeah.
So the internet made information flow two-way, right? Just like the printing press unlocked the lock of power by the church, then we had the internet kind of unlock the power of government. We became a little bit more democratized around the world, access to information, and people could, gig economy and lots of good things have come out of that. And basically the media business and the commerce business got totally disrupted. But remember, mom and pop shop owners didn't like this, and they lobbied hard, and the cable TV companies didn't like this, so they lobbied hard to stop streaming. But now everybody streams. No one has cable, and not no one. But the same thing is true here. Eventually, the technology wins, but this fight phase will be unpleasant, and it'll be volatile, and it will cause stress, and it really depends how much it escalates, right? If you think about, the war over transportation, right? The railroads, when they were, I think it was King Leopold said, why would anyone pay ever many pence to go across Europe in an hour when they could easily take their horse in a day for free. An hour versus
convenience
a day,
wins.
I don't know. Gee, I think that would be more efficient. And then train tracks. But think about, they had to go through people's land, and they had to get right away, and they had to do eminent domain. And there were a whole bunch of people who got really, really rich, right? I mean, I live in North Carolina. The Flagler family basically owned the East Coast of the United States because they built the railroad from New York to Florida. And so that same process is happening now. It's not railroads, and it's not, terrestrial television or video games. It is value. Value over internet protocol, I believe, is the most important innovation of this century. It will create untold wealth. The problem is, it's not going to be linear. It's actually going to be parabolic, but it's not even going to be smooth. It's going to be choppy and wavy and fits and starts. But once we start into the parabolic phase, which hasn't even really started yet, it's funny. I was been talking, and I was saying, it's like they just finished the national anthem, right? They haven't even started the game. And I was up in New York at this conference, and the guy said, "No, Mark, the players haven't even entered the stadium yet. That's how early it is."
Do you have a time frame? Like, when does the match start?
Look,
where are we?
I've been talking about this for a long time, that there's this 14-year technological cycle, and it has to do with computing power. And it started with the mainframe in 54, and the microchip in 68, and the personal computer in 82, and the internet in 96, the mobile net in 2010, and the trust net in 2024. So we're still 2 years away from that. That's like the beginning of the game. Then what happens is 4 years in, you have a crash. So if you go back to 54, there's a crash in 58. You go back to 68, there's a crash in 72, 73. You go back to 96, there's a crash in 2000. You go to 2010, there's a crash in 14, 15. So we've got 2 years to kind of build. We got to get through this kind of nonsense of the regulatory hurdles and the FUD, the fear, uncertainty, and doubt, and all the incumbents not wanting it to happen. Then we'll have the aha moment where everybody will say, "Oh, of course, it's so clear. Blockchain technology is the operating system for the internet of value. Oh, we call it the trust net. Oh, okay, cool." Then we'll all get excited. Valuations will go parabolic. And then it won't all work. And it'll bust. And I use pets.com, right? Pets.com. Okay. It's going to be this big company. They're going to deliver food using the internet for your pet. It is the epitome of the failure of the internet. Chewy.com. I get a box from them every week. It's the same company. It's the exact same company, same idea, same everything. It just took 21 years to mature. Netflix almost went bankrupt twice before it went parabolic. All of the big wealth in Web 2 was created after the bust. Remember when the internet was going to cease to exist? All the naysayers. See, I told you that the internet was no more.
What year was this? Because I was probably just born.
2000, 2001. Yeah. I mean, it was when everybody said, like, Paul Krugman famously said in 96, I think 97, 96. The internet will never be more important than the fax machine. Like, really? I mean,
get it that wrong, my gosh.
And it was labeled a fad, and it was labeled, something that rots the brains of young people, and there's no use case. And I think basically, anytime something's labeled a fad, you should buy it with both hands. Right? You buy it with both hands, lock it in a drawer, don't look at it. Because the problem is, if you look at it, you'll sell it, right? Like that's Amazon went down twice, 90%, and people sold. The only people that bought Amazon when it went public and held to today, I say, is Jeff, his mom, his dad, and his ex-wife. That's it. Everybody else sold because of the volatility. And the same thing's going to happen here, whether it's DeFi. And look, we haven't even talked because we don't have time, but we could talk. We could spend all day today and all day tomorrow and the rest of the week just sitting here talking to you, which would be very pleasant for me. But no, we could do it, and we wouldn't even scratch the surface of play to earn, of the metaverse.
Before all of that, I do want to. I do want to just like talk about this period of uncertainty, because we have CBDCs which are on the rise. You mentioned the digital yuan. The UK are talking about the e-pound, or even Britcoin, which just makes my ears cry. So where do you stand on CBDCs? I personally hate them with every bone in my body. That's just
as you should, right? I mean,
yeah,
they suffer all of the defects of any asset that's created by a monopoly. Okay, so they start from a bad place. Then on top of that, they're basically fiat, which is designed, right? Fiat currency that is not backed by a hard commodity, is designed to steal wealth from the masses and give it to the rich. That's it, right? The Rothschilds invented it in the 1600s. And the Bank of England came a couple hundred years later, and Bank of Spain, and then the Fed in 1913. Central banks were created to steal the wealth from the masses. Don't confuse it with economic stability. It is theft. It is kleptocracy. Now that said, a central bank digital currency makes it worse. Why? Well, right now, the central banks, through manipulation of interest rates, can push something called financial repression. So in Europe or Japan, you have negative interest rates, right? Mm-hmm. You have to put your money in the bank and you have to pay them to hold it. So there's no incentive to save. There's an incentive to take your money out and either invest it in risky assets, or what they really want you to do is spend it to create economic activity. Why? Because the people in charge, pale, male, and stale, right, have promised through entitlements, which the definition of an entitlement, it's a promise you make to yourself that you don't fund, that you ask your kids to pay for, right? My mom believes that there's a little pot of money in Washington, D.C. called Judy's money.
Okay.
I'm like, Mom, there's no pot. She said, what do you mean? I paid in all this money all these years. I'm like, yeah, and it got spent. Right now, my money goes in for taxes and pays you. But here's the problem. When they set it up in the 1930s, there were 17 workers for every retiree. Really good system. When I reach retirement age, right, there'll be 2. So I was used to say, I lose, because my kids would give it to my wife, not me. So I had to have a 3rd kid. Didn't have the 4th, but I had the 3rd. So I'm half taken care of. And so the reality is that process is a forced form of compliance. But you can still opt out, right? I can leave my money in the bank and I can accept the negative interest rate or the low interest rate or the loss of wealth through inflation. With a central bank digital currency, holy freaking crap. It's scary what they can do. They can program that if you don't use this money by the end of the month, it vanishes. If you, because your social score is so low, you can't spend on this fancy car. You can't spend on this piece of art. You can't buy this other digital asset. You, because we think less of you, can only buy these certain things. We can program the money. We can surveil everything you do with your money, right? No longer, can I hand somebody money or send somebody money? Gone. All of that is bad, and I can probably get over it, except for the fact that I have a small margin of safety. The average person doesn't have a margin of safety. Mm-hmm. And that's insane to think that someone works hard. I had this experience. I flew through Chicago to go to a football game this weekend. Right. And as I'm coming out of the airport, I always look at the price to park for one day at O'Hare Airport. Okay.
How much?
To park for one day is like $75. That's 2 days, maybe actually now 3 days of minimum wage after tax earnings. To park for one day. And people say, well, they don't park there. They get dropped off. But that's not my point. My point is that's insane. And now, if that person works really hard to make that $75, if the central bank can turn on a switch and say, boy, if you don't spend it at a restaurant or at the Gap, I'm sorry, it's no longer your money. That is a frightening, frightening thought. So for all those reasons, I'm in your camp. I can't stand the idea of central bank digital currencies to the core of my being, but they're coming. The Chinese will be first. The Russians will be second. We, because we're stupid and we're not doing anything, will be third or fourth or fifth.
Well, do you think you should be first? Well, should you be first if we don't like it to our core?
Look, it's all evil. But if you're going to be evil, be first and evil. Because here's the reason that you don't want to be second or third. The dollar today is the evil currency, right? It is the hegemonic world reserve currency because we cut a deal with Saudi in 71, said we'll protect you if you denominate all transactions globally in dollars. So think about this. Anyone who challenged that disappeared. Saddam Hussein, I'm going to price oil in euros, gone. Gaddafi, I'm going to price oil in gold, gone. Anyone who ever threatens the denomination of petrol transactions in dollars, wiped out. Okay? That's what all the wars are about, all of it. Now, if you are in Venezuela and the dictator comes in, gets all his cronies, pushes all the assets to the cronies, and then wipes out the value of the currency, so their assets skyrocket. People forget the best performing stock market in the world the last 3 years is Venezuela. Did you want to own any Venezuelan stocks? No, because you have to live there, which actually is not a bad place, but you have to live there, own the Venezuelan stocks to get the benefit, and you have to be part of the top. But if you're an average person in Venezuela, you got wiped out because the Bolivar went down 99.999%. So if you had opted out, what did you do? You actually went out in the street and you tried to buy dollars. That was the first thing you did. You tried to buy green pieces of paper. Now, sometimes they were counterfeit, sometimes they're real, but that's what you did. Well, then people said, well, hey, you could use this thing called Dash. So let's use Dash. Dash has done really well. And then we're like, hey, you could buy some Bitcoin. Now, mostly it's local Bitcoins where you got to meet the guy or the gal in the alley and you got to swap and there's a wrench risk and all kinds of bad stuff. But people did it and they saved some of their wealth. So I think about all of these places where the governments are, again, intentionally devaluing their currencies to push the wealth up to the top of the food chain. All of what we're all working on now in crypto is to prevent that. And so that's why at the end of the day, so my point on China said, no, here, we'll give you the e-renminbi. Just buy the e-renminbi and we'll honor it and we'll take care of you. So then what happens is the dollar starts to lose ground as the global world reserve currency. So that's why I think we should have been there faster, because if people wanted to buy something beside their home currency, why not make it an e-dollar or a Fed dollar? I wouldn't call it a Fed dollar, call it an e-dollar. But by the way, you know where the word comes from?
Where?
From the Netherlands. From the Rothschilds. The Rothschilds set up the first central bank in the Netherlands, and theirs was called the dollar. So we stole it because we admired their thievery, I guess. And now we have dollars.
I think that the whole idea of CBDCs absolutely frightened me. And we have that margin, like you said, that's that safety margin. And I think if it wasn't for Bitcoin, I would be absolutely petrified. Like I always refer to myself as just like awake, and I'm just like watching everything that's going on. We don't need to, I'm not going to get political. It's for another time. I mean, we could do, but I won't throw that on you.
We don't even have to get political because
it's all the same.
It's all the same. I say this all the time. There's no left, there's no right, there's no Democrats or Republicans or labor or conservative. It's in and out. And when you're out, you do or say whatever it takes to get in. And when you're in, you do or say whatever it takes to stay in. So all of this different, no, they're all the same. They're all after the same thing, power and money. And it's all about moving it to the top because we live in a hierarchical world. Now, the problem, again, is technology has now found a way to invert the pyramid. And they don't like that. And that's why a lot of people are going to do a lot of things to try to stop this. But I don't remember who said it to me the first time, but think about if you get lost.
Right.
Do you stop and ask for directions? No, especially not where I live in the South, because they say, well, go to where the old store used to be, take a left, and then go to where the oak tree was and take a right. I'm like, I don't know where those are. I haven't been here for 20 years. So you're telling me nothing. Now I look at Google Maps or Apple Maps and I just go. And 99% of the time it works. But in code, we trust. So now we have the ability to have smart contracts, and we have the ability to have derivative contracts that can't be spoofed by bankers in London who then get fined. And they're like, oh, well, we build the fines into our business because it's just part of doing business. So yeah, we know we're cheating and we're suppressing the price of gold, but that's what we do. In a smart contract, you can't do that. And so code equalizes the top and the bottom get power. And Jimmy Song talks about this so beautifully. He said, look, if you get a fixed income, right? Either, you're on fixed income as a bond or a pension, or if you have a job and you get paid a wage, it says you're a slave.
Yes.
It's a strong word, politically charged, but it says you're a slave because you don't control the value that creates, because they can deflate it away. I mean, inflate it away. It says with Bitcoin, you become self-sovereign and you become able to save in a positive way. I haven't gotten my BlockFi credit card yet because I'm just too lazy to fill out the stupid. I mean, it's like the cobbler's kid have no shoes. And part of it is I love my American Airlines credit card, but I shouldn't, because every time I accumulate all my miles, I go to spend them, and they're like, "Oh, did we say 20,000 for a ticket? No, it's 40, or it's 60, or it's 80." So they devalue my asset. So imagine having an asset like a Bitcoin rewards card where the asset actually increases in value. So, but what if it doesn't? I'm like, think about it.
But it will.
Scarce asset, rising demand, limited supply. Okay. I was not an A+ student, but I got grades in economics. If supply is fixed and demand rises, and it doesn't have to rise off the charts, it just has to keep rising. Price will
faster than inflation. It's got to keep rising.
Yeah. So anyway.
But okay, so a lot of different things there, and I think what's really interesting is the whole idea of being a slave to your employer. That resonates with me so much. And it's not just about inflation, and it's not just about not being able to turn around and say, well, hang on, my salary isn't going as fast as inflation is going. Right. It's also just about the whole idea of trading time for dollars, and just taking ownership over your time. Like the whole idea of sovereignty, I'm trying to bring that ethos into my life in general, not just with money, but just with everything. Like I want to be sovereign over my time, over everything that I do. And I think that's also what I love about crypto and Bitcoin, that it doesn't just teach you about money. It teaches you, once you grasp the concept of money and sovereignty and autonomy, it then changes your opinion on everything and the way you look at everything.
100%. And I talk about this all the time. Everything we do, everything is about converting energy to value.
Yes.
Right. You and I, we got up this morning, we put some fuel in our body, and we go about our day trying to convert energy into value. And Bitcoin is one of those perfect vehicles for turning energy into value. And it's a perfect store of that value because it can't be inflated away by fiat. And there are a lot of ways you can create value in the world. I mean, you could make stuff, right? You can assemble widgets. You could entertain others. You could, create new algorithms that create value in the future. You could innovate new technologies. You could make an old technology new again. I mean, people forget all the time. They're like, oh, Elon Musk invented the electric car. No, he didn't. The largest car company in America in 1903 was the American Electric Vehicle Company, right? And Henry Ford put him out of business because he wanted people to buy his cars that ran on kerosene or gasoline, which is an effluent of kerosene. that John D. Rockefeller wanted to sell rather than flush down the river and have the river catch on fire. And so, that was dormant technology for the better part of 100 years before they said, oh, we should have vehicles where we don't make the power on site, right? Internal combustion engine means every car is its own power plant. Well, how about if we have a combined power plant and then we distribute the energy and store it? Interesting concept. But again, not new, right? There's a car in the basement of Dartmouth Engineering School that went 46 miles to the charge back in 1903. Pretty cool.
It is. And I do want to move on just a little bit. And I want to talk about investments and really just spotting that investment, because like you said, I guess actually it's not really moving on that much, because, you said not everything new is necessarily new, right? Like the electric car. So given that right now we are still so early, as everybody likes to say, we have, NFTs booming. How are you spotting a good investment? Because I understand that's what you said, that is where true wealth is built, from being super early.
The greatest wealth comes from investing in something you believe in before others even understand it.
Yeah.
Well, how do you believe in it? Well, you have to be exposed to it. Okay. So how do you get exposed to new ideas? Hang out with really smart people and make it a point to, look for new ideas. I say all the time, I have the greatest job in the world. I get paid to talk to the smartest people in the world. Right? That's my job, right? I'm supposed to go around and talk to people in hedge funds and private equity and venture capital and entrepreneurs. And some of these people are just really, really, really incredible. And if you can't pick up a thing or two, then, you're just fast asleep. So one is just hang out with the right people.
Yeah.
I just think when I tell young people, think of the 4 people you spend the most time with, that's who you'll become. Choose wisely. So we should all constantly be thinking about who we want to hang out with and who we want to spend our time with. But in terms of spotting investment ideas, very few, almost zero, are, oh, I woke up one day with this great idea. I mean, a lot of people think they do that. Not very many actually do. Mostly it's a friend of a friend of a friend introduced me to somebody and they tell me something that is interesting. So, how did we invest in infrastructure for the internet back in the 90s? I was working at the university. We went out to California for 2 weeks. We hung out interviewing. Actually, we weren't interviewing. We were begging to get in to Kleiner Perkins, Sequoia, Accel, all these firms that even then were popular, but they weren't the brand names that no one can get into. So you could get access. And in talking to those guys and gals, you heard stories about just amazing innovation. But to be honest, right, when they told us about this company, called Google, and it could be a search engine, we're like, wait, there are 20 search engines. Why do we need 21? Right? There was Alta Vista, there was Web Crawler. They said, no, you don't understand. Those do search the wrong way. We've invented a new way to do search. And look, I was 1 week old. Okay, a week ago, I actually learned that there are 1.7 billion websites on the planet. Okay,
1.7 billion websites.
1.7 billion websites.
Okay,
half-ish are owned by Google. And everybody says, "Well,
doesn't surprise me. I don't know."
Well, here's why. Every time you type in a question or I type a question into Google, they create a new website. Unless that question's already been asked, then they just send you to that website. So, boom, mind blown. That's indexation. They don't search the entire web. Think about searching the entire web for some stupid question I ask about, Italian football or something. Okay, no, it just sends me to the same question that someone's already asked, and I get the instantaneous answer. So that innovation led to incredible wealth creation. I always say there should be a quad at Notre Dame called the Google Quad. Or, when we saw the opportunity in the mobile net to invest in e-commerce, and we invested in Alibaba, and we invested in VIP Shop, and we invested in the companies that were helping these companies do the infrastructure, the fulfillment services, the machines. And again, it wasn't that we were geniuses. It was that we heard these incredible entrepreneurs And here was the funny part. Webvan, which was a
Yeah.
total failure in 2000, right? Smartest guy, head of Arthur Andersen, leaves, starts this company, huge backing. I think like 700 million. I mean, it was some crazy number. And they were going to deliver stuff to people using the internet. And it totally cratered, total loss. DoorDash and Uber Eats are the same thing. We just needed broadband. We needed more delivery. We needed GPS. You know, how did we get GPS? This is an awesome story, right? So GPS was this system for the government, right? And they built it literally using eminent domain on a piece of spectrum that was owned by this big hedge fund guy. And they were going to create this fourth network, and AT&T and Verizon and T-Mobile, there was going to be this fourth one that was going to compete. And we'd invested in it. And the two big ones, through lobbying, corruption, basically said, we don't want them to compete with us. So here's what we should go to them and say, you know, that GPS system, your new network is interfering, and that's a national defense risk.
Of course.
Well, wait a minute. It's my property. You built a garage on my property, and now you're telling me that my property interferes with your enterprise?
Sounds about right.
That's about how it happened. And so went bankrupt, but we needed that GPS system so they can track us all the time on these. And so all of it comes together to say, so how do you pick a good investment? One, talk to lots and lots and lots of people and listen to lots and lots of crazy ideas. But I also say that in much of it is just pattern recognition. You know, if you've heard one story, you have about a 50-50 chance of getting it right until you think, and then your odds go down. If you've heard 10 stories, actually got a little better odds because you can hear the bad ones because they're really easy. I would say I know in 5 minutes, I'll never invest with somebody. It might take me 5 years sometimes to figure it out.
In 5 minutes though, what's the red flag in 5 minutes?
Oh, it's just, look, there's so many, right? I mean, there's the no jerk rule. I have a more fanciful term for that, but there's the no jerk rule. I mean, it's just people who are arrogant, people who are pig-headed, people who aren't courteous. I mean, one of my big things is, right, how do you treat the other people around you? Right? People who don't treat their peers and, you know, and subordinates well, no time. You know, there's things that are fanciful that just don't sound right. They sound too big and too grand. But then there's the stuff where you just listen. Well, it's the first time I met Zach and Flory at BlockFi, right? It was just easy. I mean, she's a genius. He's an amazing leader. I mean, together they're magic. And part of it is just you've seen it before, right? And, you know, having white hair proves I've been around long enough, because it is true, that old saying, that which doesn't kill you makes you stronger. All the losses make you a better investor, right? All the times you made a mistake, that you thought something was going to be great. And I'm a big believer also in, and now it's really popular, and I'm not saying I was early. It wasn't my idea. I read in business school this paper by Paul Romer. And Paul Romer won the Nobel Prize 3 years ago for something called the Law of Increasing Returns. And I read this paper as part of my, you know, class, but it struck me. It just hit me. What he said is, it's not the best technology that wins. It's the technology that gets critical mass first. And so for the rest of my career, which that's luck, right? Why did I read that paper? Luck, total luck. Could have blown that assignment off, or like I did many other assignments, but I actually read it, and it just hit me that the network effect was real, and that it was this getting to critical mass. And, you know, I remember in 2017, right when we were starting Morgan Creek Digital, you know, and I was getting, and that was my hashtag, big, really big. You know, blockchain is big, really big. Bitcoin's big, really big. People are like, you're an idiot. It's a Ponzi scheme. And, you know, why do you believe in this? And I said, look, it is, we've seen this movie before. And the miracle was not whether Bitcoin would go from $1,000 back then to $4,000 or $40,000 or $400,000, which was my price target at the time.
Yes.
But it was that it went from 0.004 to $1. That was the miracle, right? It should have died. It should have been a science experiment that failed, but it didn't. And so then you have to do the work. And when you do the work and you realize this is innovation writ large, and Eric Schmidt summed it up better than anybody else, as only Eric Schmidt can, smart guy from Google. And he said, look, what Satoshi Nakamoto, whoever he, she, they are, did is not that they created Bitcoin. Okay, that's big, but that's not the big thing. The big thing is that he, she, they created a way to create scarce assets in a digital world. Because in the analog world, scarcity is easy. I do a painting, there's only one, it is scarce.
Yes.
If I take a picture of that and I put it into a JPEG, I can copy paste 1,000,000 times. It's not scarce anymore. The electronic world had very difficult time with scarcity.
Yeah.
In the digital world, now with NFTs, and Chris Dixon's, I'm not going to steal his thunder because he did it, I didn't, but he did this thread a week ago about why NFTs are so much bigger than anyone understands. Because it's not about crappy art or good art, depending on your view of art. It's not about CryptoPunks or, rare Pepe.
Space punks. Yeah.
It's about digital scarcity.
Yeah.
And that there will be tokens, okay, whether non-fungible or whatever, just tokens. There will be tokens someday, orders of magnitude more than websites. And websites make the internet. So now we're going to have orders of magnitude more tokens, so we can exchange anything of value, every stock, every bond, every currency, every commodity, every piece of art, every piece of real estate, every case of wine. That silly piece of art behind me, right? That my car outside, everything will be tokenized, and it will live outside borders, outside nation states. That's what scares the nation states. That's what scares the governments. That's what scares the banks. Because now you and I can exchange value in a two-way transaction without any intermediary, without any counterparty risk, without any fees. Now, there will be fees. There will be fees. Like right now, I can send you Bitcoin across Lightning for $0. That's the wrong number. And we own a little piece of that company, and we're really excited with Strike, but with the Bitcoin tipping, the Twitter tipping and all that. Yep. But 0 is the wrong number, right? Okay. There has to be some fee for executing these transactions. But right now it's about growth. It's about accumulation. And back to Paul Romer. What Paul Romer said is there's a reason that the technology that gets the biggest network effect wins. It's because it becomes unassailable. And people say, oh, but what about MySpace and Facebook? I'm like, oh, yes. Now it's even better. That was in a closed source world. In an open source world, it's over. Because in the closed source world, I actually could invent something better, right? The technology of Facebook was superior to MySpace. Incrementally, but it was better. Now, if you are the main coder for the Bitcoin blockchain and I want to add something incremental, you hit copy paste and you're just as good or better. So the open source world coupled with the Metcalfe's law growth, once something becomes the leader, it becomes unassailable. And the compounding effect of these markets is why I do believe this is the greatest wealth creation opportunity I'll see in my lifetime.
I think it's truly incredible. Everything is just going digital. You answered my next question. I really wanted to hear your thought on NFTs, but yeah, you've definitely answered that.
Big, really big.
Which means you've answered my question on your thoughts on Ethereum and everything else. But just finally then, go on. Did you want to say?
I think Ethereum is an amazing toolkit. I think it has some limitations, and
of course,
and I think there are other layer ones that are trying to compete. And ultimately, I don't think we need to know right now. If you go back to the internet, there were 80 protocols. There's TCP/IP, and there was a whole bunch of others. Today we have 5. Right? We got TCP/IP, we got FTP, we got HTTP, we got SMTP, and we got www that ties everything together.
Yeah.
In the future, I can see a world where Bitcoin's the base layer, where Filecoin does what FTP does. Maybe it's Cosmos, maybe it's Solana, maybe it's Polkadot that is those two layers. And then Ethereum is the www dot. And everybody says, oh, but it doesn't scale. And look.
Not today, tomorrow it could.
Technology, innovators will innovate and they will solve the problems. Or someone else will solve something else and it will gain critical mass and we'll have other solutions. But I think at least right now, it appears that the BTC and ETH are the leaders. And I look at one as a base layer and a use case as digital gold. I look at the other as a toolkit on which other things will be built. And the benefit of that is, unlike a store of value where the increase in value is determined by usage, the more users and a fixed supply, the higher the value. Here, we have a model where we can share, right? Axie Infinity grossed more than Fortnite in the last 12 months. It's unbelievable. And part of it's owned by the user community. That's awesome. And that model will be replicated over and over again. And look, there will be, we invested in Uber, Lyft, Grab, Ola, Quadi, which became
all
DiDi.
of them.
We did every ride-sharing company on the planet because we thought it was amazing.
Yeah.
All of those will be displaced by decentralized versions because there's no reason that when I got a ride to the airport the other day up in Chicago, that 30% of that money went to a centralized organization just for writing code years ago. No reason for that. Now, will they decentralize themselves? Probably not. So somebody else will probably create it. But the hard part is replicating the network effect. So we'll see.
Yeah, I think it's essential to have an open mind about all the different protocols that are being built at the moment. For me, Bitcoin is king. I do believe it will always be king, especially when it comes to being a store of value, obviously, as we've spoken about. But I'm excited, who knows? It's impossible to know, what's coming next. But just finally, I want to ask you, given Bitcoin has, it's down at 42K today, where are we at in this cycle? A lot of people are calling for new all-time highs. I know Jason Williams is calling for an all-time high at the end of October. He loves end of October. So where do you stand on this? Or are we headfirst into a bear market?
Jason Pomp and I had a little debate about this morning.
Okay.
And look, I hope they're right. I do caveat that with hope is not an investment strategy. It's actually a four-letter word. So hope is not a good thing to hang your hat on. And Jason has very good reasons for why he thinks that's going to happen, as does Pomp. Look, I believe that predicting the future is impossible, to your point. And that, like Soros said, you should think in scenarios, not in single points. So I believe the range of outcomes this year looks actually pretty bell curved. Normally, I would say the distribution of outcomes in Bitcoin is skewed to the right, right? It's not a perfect bell curve. It's skewed to the right, and it's heteroscedastic, meaning that there's more right tail risk than left tail risk.
Okay.
That said, I think right now, I think we're pretty bell shaped. I think there is a low probability that we bust through the 64,000 and make quad digit. And the reason I believe that's a low probability is I unfortunately have probably convinced myself that if you go back in time and you say, oh, well, this is just a 4-year cycle that has to repeat. Okay. Totally logical.
Yes.
With one flaw. In 2009, cycle repeated. 2013, cycle repeated. 2017, cycle repeated. So why is it different this time? 2009, 13, and 17, everyone wasn't looking at the same model. Right? 2009, there were no models. 2013, there were no models. 2017, there was the one parabolic trav model. I don't think he actually even made it. Some other guy made it, but it basically showed the Metcalfe's law parabola, and then Kane Island Crypto did his version. Tim Peterson did his version. There was a lower trajectory because he had a different decay rate, and his has actually been much more accurate. So then 100 trillion came along, and love him, love his work. But here's the problem is everyone was looking at that model, and everyone, including myself, was convinced that on July 15th of this year, we were going to hit 100,000. And then we were likely going to have that parabolic blow off that, Max Kaiser and Jason and all the others were saying we're going to 200 or 220 or 250. Totally logical. It's exactly what happened in 2017. Totally logical. We hit the 100,000. We hit the 10K 6 days after the model said, and within 5 weeks we were double that, because that's when the speculators come in and the greed pushes price above value. Then we crashed because we didn't have any way to custody it, right? And we had to build out the custody, and we had to get the institutions, and so we went all the way down to 6, and then we went all the way down to 3. And so here we are. We hit 64. I unfortunately believe that whether it was Michael Burry or someone else like him, I might even posit that Elon himself might have been short. Who knows? But somebody got short, and they got short in size, and they triggered what we're talking about at the beginning of this. There were way too many people with 100 times leverage. 1.7 million liquidated. And boom, we're down 55%. Then liquidations stop. Some institutions come in and buy, again, whether that was Elon buying or others, but there were two big accounts, 1.7 billion each, buying back in July, and we're up 50% from that bottom back to the low 40s. And so everybody's like, oh, we're back in the bull market. Possible. The problem is it's possible, and I'm not saying likely, but it's possible that this cycle has been truncated because too many people were looking at the stock to flow model, and that the rollover this time was the top. And then that means we're in an 18-month bear pattern until the next, and that doesn't mean we have to go down 84%. It just means we could be stuck here. The thing I'm most concerned about, and again, it's not a big concern. I don't lose sleep over it, but I am concerned about it, that no one that I know, and I know a decent number of people, no one I know saw October, November 2018, 6-3. No one. I mean, I'm sure somebody out there saying, I saw it. I'm like, I don't believe it. No one I know saw it. And why did that happen? Supply and demand. I mean, you only get the parabolic moves when people are buying on margin. There just aren't enough new owners in size. And Pomp has some very compelling stuff that Will put together on the number of new addresses on the chain that came in as of July this year. Very compelling. But the dollars aren't big. And so until we, and here's the problem as I see it, you just had the three largest exchanges in the world basically just told, we're going to shut you down. Now, they didn't exactly say it that way, but they basically said, even if you try to operate outside China and come get Chinese money, we're coming after you. So look, Binance or Binance, depending on how you pronounce it. I never heard anything.
I say Binance. I just say Binance.
And I'm like, that's interesting. It's like insurance and insurance. And then Wobi and FTX. And now FTX is moving to the US and they're doing all this, but there's still a lot of it's China and still 20% of volumes, and whether that dries up. So if that is shrinking, show me the new money that's entering at a pace that can cause a parabolic move. I hope it's there. I would love to see it. And I'm working hard every day to try to convince institutions, pension funds, endowments, wealthy individuals that they should get off zero, but it's still tough. So that's a long answer, Layah, that
it's okay.
I don't want to be the boo bird, right? I don't want to be the guy who says, oh, we're in for a bear market. But I think we're stuck right now. And if we get incremental buying power, I do think that the free float is small enough that we could, and that's why I say there's a small probability that we could have that blow off to 6 or to 9 digits, or 6 digits.
We need that.
Digits, yeah.
6 digits.
Yeah, 6 digits.
We need that new money, basically. We need a lot of new money.
We need some new money. And look, we need the next billion, right? I participated in this thing called the Coins podcast, which is this awesome thing. And the guys did such a great job putting it together. When I say guys, I mean guys and gals.
Okay.
But because it was guys and gals. And they did such a great job, so well produced, so high quality. All the the OGs are there, and I got to be there because I'm friendly with Patrick, and it's awesome. But it's for the next billion, right? We need to get the next billion. And I'll leave you with this. It's so funny. So I got asked to speak at the Google Investment Club a number of years ago, and Google Value Investment Club actually, and so I go and we're walking around the campus with this group of very smart guys, and they make so much money that they want to invest it in value instead of putting it all in Google. And I said, so how many people are on the campus? And the one guy says, 25,000. And the other guy says, are you kidding me? There's 40,000. I said, so within 15,000 people, how many people are on this little campus, which is not little. And I think that's the problem of how many users are there in Bitcoin, right? Are there 100 million? Are there 200 million?
Yeah.
Like we know within 50 or 100 million how many there are. We don't know exactly. So getting the next billion is really, really important. And that takes, Tom and Giselle saying, are you in, right? That's awesome. And it takes people seeing ads in the mainstream media, and it takes something emerging like GoDaddy did for the internet that makes people go, wait, a website? Why did I do a website? So all those things are important. But ultimately, it goes to need, right? When people need to opt out.
Yeah.
I'm actually surprised there aren't more users in Europe, quite honestly. With negative interest rates,
I know.
I would think everyone and their sister would be, opting out for at least a portion and taking money out of the banks. Of course, then they'd be exacerbating the problem that the banks would fight back against. But we are where
better than negative interest rates. Yeah, I'm with you. I think need is actually a really important point, and that in my opinion, is sort of the silver lining in the last 18 months that we've had, whether it's inflation with more money printing, whether it's vaccine passports and all these things, which really just come down to more greater control. Crypto for me, Bitcoin, whatever you want to call it, is kind of just like that lifeboat. And so many people have been red pilled and orange pilled and all these sorts of fun colors in the last 18 months. So I think, need will be the case. I mean, we see that in Africa and Latin America and so on.
The cool part is it's inevitable.
Yeah.
It will take longer than we all think or want, but it's inevitable because it is superior technology. It is solving basic human needs. Yeah. And the talent, right? 2 things to do in investing: follow the money, follow the talent. And the talent migration into this space is like nothing I've ever seen. And I've been around a long time, and I've seen lots of talent migrations, different levels. The internet was by far the biggest, best, incredible. This is bigger. And, people who you just can't believe are leaving their traditional jobs, their traditional world.
Oh, yeah.
And you just remind one last story and I'll let you go.
No, go for it.
I did DAS, the Digital Asset Summit here up in New York last week or 2 weeks ago, I guess. And 2 years ago was the last time we did it because the COVID lockdowns, the nonsense. And it was the last live event I did in November of 19. And I remember being up on stage doing the closing keynote, and I finished, and I was doing my rah, this is, what you should do. And this young guy comes up to me and says, "Hey, would you call my mom?" I'm like, "What?" He says, "Well, you were up there saying that, this is the greatest talent migration and that we're smart for going into this. And my mom thinks I'm an idiot. I left this big law firm." And
That's amazing.
And I said, "Yeah, let's call your mom." So we called his mom and said, "No, your son is not an idiot. He's really smart. And this is big, really big. And I need to find out who it was and meet him and have a beer and see how he's doing. But I'm sure he's doing well. And it is one of those things where I love the people that I hang out with. I love doing stuff like this with you, and the energy, the enthusiasm, the desire to make the world a better place, right?
Yeah.
You hear Jimmy speak and you're like, "Man, I want to go save the world. I don't want to buy Bitcoin. I want to help humanity."
Yeah.
And there's so many people. And if we can make some money along the way, great. That's good too. But there's so many other really important things, like reversing the wealth and income inequality problem that we have around the world, like raising more people out of poverty, like my personal pet peeve. How can we have a weight loss industry in the United States where we spend $20 billion a year and 10 million kids go to bed hungry every night? That's unacceptable. That's absolutely unacceptable, insane. How can that be? Well, it's because people don't spend time on it and they think it's okay. And it's not okay. And there are lots of things that we can do, taking many of these technologies that we're all working on to make those things better. And there are people working on it, and I love and admire all those, and we support them with our foundation and things like that. But so much of this fight, and I said, this is the fight, right? First they ignore us, then they laughed at us, now they're going to fight us. And it's funny, I saw a clip of myself from 2018, right after I formed Morgan Creek Digital. I was on one of the morning shows with Maria, I think. And she said, "So, you've spent all this time in the traditional world, and what are you going to do now?" I'm like, "Well," and it's so funny because I was all suited up and I looked really good. I'm like, "Man, I look like crap now. I don't wear a suit. I wear this silly
suits are dead. Suits
are dead." But I was looking pretty sharp, and I had my orange tie on for Bitcoin. And I said, "Look, I'm going to spend the next 2 decades tokenizing the world."
Nice.
And I was like, "Wow." And I looked back and I tweeted it out and hashtagged it. And look, that's what we're going to do. We're going to tokenize the world. And every asset in the world is going to be tokenized. All of it is going to drive this trust net, this internet of value, and is going to change everything. And it's cool.
It is cool. I think it's incredible that as things get harder in this world and authoritarianism comes strong, we have an option to opt out. We have an option to and a method to make the world a better place. That's one of the reasons why what really drew me to this industry was not so much Bitcoin at first, but it was more just like blockchain technology and banking the unbanked. I don't know, that really excited me. That's always really excited me. So
40% of the adults in the world don't have a bank account. 2/3 of them have a mobile phone, and all of them can be
download an app.
They can be self-sovereign. And look, there are tons of amazing stories. I mean, my latest one I've been telling, which I think is just totally cool, is these migrant farmers in Southeast Asia that were getting paid literally like $1 a day to do really hard work. Basically started doing Axie Infinity and bought some Axies and started breeding the Axies, and are now selling them. They're making now tens of thousands of dollars a year instead of $1 a day. And everybody says, "Oh, that's just such a waste of time." Like, are you kidding me? It is awesome. It is an awesome example of technology making people's lives better. And those people would become better citizens. And I go back to, there was a time in the United States where every African-American doctor or lawyer in America was the son or daughter of a Pullman porter. Pullman porters were indentured servants. They were owned by the railroad.
Okay.
We don't like to talk about that, right? They were owned. These people were owned by the railroad, but they all saved up and made better lives for the kids, sent them to school, got them educated, and eventually we had an African-American president. And that is awesome, right? And that's what's happening here, is we're seeing this technology impact real people's lives around the world. And some might say, well, what good is an Axie? Well, my son and I have had a lot of fun playing video games together, and we bond over it. And, I teach him about business, and I don't know, I see value in it. And I think that person's life now is better. And from that project, maybe they graduate to another, maybe actually they go back to school and learn how to code. And then maybe they get a job, and maybe they build the next scaling solution. Who knows? Maybe that's a little fanciful, but it's not impossible.
I don't think so. Yeah, no, I'm with you. But Mark, I want to thank you so much. It's always so fascinating to speak with you. We've gone through so many topics, more than I'd expected. So it's really amazing. So I really appreciate it. Thank you so much for coming on.
No, great to be with you, Layah. We'll talk to you soon.
All right, guys. And don't forget to tune in next week for another brilliant guest. We'll see you then.